Welcome to this explainer. Okay, so if you're an executive, a founder, or a high-level manager, you already know exactly how to build value for a company, right? You're in there analyzing balance sheets, you're optimizing operations, and you're strategically forecasting for the next fiscal year. But let me ask you this, how often do you apply that exact same rigorous strategic framework to your own personal wealth? It's kind of crazy when you think about it. Today, we are treating personal finance with the absolute same discipline used in corporate wealth architecture. We're going to look at the data and the foundational habits of self-made millionaires and translate them directly into an executive playbook for your own life. So here is our strategic briefing for today. We'll start with the executive wealth paradox, move into strategic capital allocation, look at patience and compound growth, discuss personal research and development, and finally uncover why discipline matters way more than gross income. Let's kick things off with Section 1, the executive wealth paradox. Here is a totally counterintuitive question for you. Why on earth do so many high earners actually struggle financially? It's a bit of a mind bender, right? You've got executives pulling in high six, maybe even seven-figure salaries, sitting right up there in the C-suite. Yet behind closed doors, their personal runway is practically zero. It's that classic scenario of the flashy CEO who is technically poorer than the quiet middle management director down the hall. The common trap is assuming a massive executive salary automatically equals actual wealth. But in reality, as you've probably seen, high income almost always triggers immediate lifestyle inflation. The luxury cars, the massive mortgages, the exclusive country clubs, the cash goes out literally as fast as it comes in. A sky-high top-line revenue means absolutely nothing if your operational costs consume all of it. Which brings us to the foundational millionaire lesson. It's deceptively simple. You need to create a strict personal profit margin. Think about it. You would never run a successful business with a 0% profit margin, would you? No way. You'd be bankrupt at the first sign of market volatility. Well, the exact same logic applies to you personally. Self-made millionaires just don't spend every dollar they earn. They intentionally engineer a surplus, a margin, by saving and investing a significant chunk of their income. That margin is the literal lifeblood of wealth creation. It is the fuel that allows your personal enterprise to grow year after year. That brings us right to Section 2, strategic capital allocation. The source material couldn't be clearer on this. Relying solely on a paycheck, even a massive executive paycheck, is a major vulnerability. It is purely linear income. You are trading your time and your expertise for dollars, and if you stop working, well, the revenue stream stops flowing. Millionaires absolutely refuse to let their financial security rest on a single point of failure. Instead, they pivot. They choose to make their money work for them. It's like turning your capital into a highly efficient, independent workforce that operates 24/7. So what exactly do they buy with that personal profit margin we just talked about? They acquire assets. We're talking stocks, real estate, ownership in private businesses, the whole spectrum of income-generating vehicles. In the corporate world, this is literally just basic capital allocation. You take retained earnings and you reinvest them into divisions that are going to produce future cash flows. Millionaires do the exact same thing personally. They are building a diversified balance sheet that generates passive revenue and appreciates over time, effectively decoupling their wealth from their daily labor. Let's move on to Section 3, patience and compound growth. In the business world, we are constantly under pressure, right? Quarterly earnings reports, the board demanding immediate results. But real wealth, it's rarely built overnight. True financial success requires fighting that executive urge to chase quick profits or immediate gratification. You literally have to step back from the chaotic daily ticker tape and focus on long-term strategic compounding. You've got to get out of your own way and let the math do the heavy lifting over sustained periods. And when we say sustained periods, we mean compound growth requires the passage of decades, not financial quarters. To put that into perspective, think of decade 1 as the startup phase of your wealth. You start long-term investing, planting the seeds, and honestly, the growth feels frustratingly slow. But hang in there, because by decade 2, you hit the scaling phase. The compound growth really starts to visibly multiply your money. Your interest is now earning its own interest. And then by decade 3, you achieve market dominance in your personal finances, lasting financial success. That initial capital you deployed decades ago has snowballed into an unstoppable force. The secret ingredient here isn't timing the market, it's simply time in the market. Moving right along to Section 4, personal research and development. Any leading company dedicates a massive chunk of its budget to research and development to ensure it doesn't become obsolete. Well, self-made millionaires treat themselves as their own most valuable asset, requiring continuous R&D. They read books constantly. They study successful businesses to reverse engineer their success. They aggressively improve their own skills. And crucially, they stay highly informed on macroeconomic and financial trends. They don't just react to the economy, they anticipate it, all because they've actually done the research. It all boils down to a truth summarized perfectly in our text. Increasing knowledge is one of the best investments they can make. Knowledge yields a guaranteed return. When you dedicate time to learning, you are quite literally increasing your own market value and your capacity to recognize lucrative opportunities that everyone else is just walking right past. Investing in your personal R&D is just as crucial as your company innovating its product line. And now we have arrived at the climax of our explainer. Section 5, Discipline over Gross Income. I want you to consider two very distinct profiles. On one side, we have the high salary overspender. This is an executive pulling in $500,000 a year, but burning right through it with luxury leases, bloated overhead, and absolutely zero personal profit margin. Now, on the other side, look at the average income earner utilizing smart habits and consistent investing. The data from our sources is crystal clear on this. The ordinary person with an average income and ironclad financial discipline will systematically outpace that high-salary executive who overspends. Every single time. Gross income is merely a vanity metric. It's your personal net income, and exactly what you do with it that actually dictates your financial destiny. Ultimately, becoming a millionaire isn't about finding some secret shortcut. I hate to break it to you, but there's no magic pill, no insider stock tip that is going to suddenly build you a sustainable empire. It is actually about operating your personal finances like a well-oiled machine. It all comes down to controlling your spending, thinking in terms of decades rather than days, and making wise financial decisions over and over and over again. It is simply the mundane execution of brilliant fundamentals. Which brings us to our final question today. I want you to audit your own personal corporation right now. Are you secretly hoping for a shortcut, a sudden windfall, or a massive bonus to finally make you wealthy? Or are you actively building lasting financial success by applying these enduring principles? Take that rigorous, strategic mindset that built your career and start applying it to your own wealth architecture today. Thank you so much for joining me for this explainer, and I'll catch you next time.